Good morning, all. So I thought we'd start off with a couple economic updates. First and foremost, we continue to grow, right? I mean, you've all seen this before, and I've done this many times, but it really is a key slide that I think is very helpful to some of the things we're going to talk about here in a bit. But as you can see here, our population is going up almost to 1.8 million. And more importantly, the blue bars that you see there, that's the net migration, right? Those are people that are coming to the state, and that's really important. When you look at the economic indicators, and we see this every year, and we like to forecast this, but it's really important because as our population continues to grow, even though it's a 2% growth year over year, that's still important. That drives things like employment, right? You have a lot of people coming to this market that are employed. You have a lot of people that are coming to this market that are unemployed or retired, but it's still an impact. And a lot of that, with unemployment being very low, is driving our personal income. And our personal income is driving a lot of the real estate products that we see here in this marketplace. Last but not least, housing starts. Housing starts are forecasted to grow exponentially. I mean, exponentially being 4% or more for the next couple of years, which is really important. And so with that backdrop, I think it's important to talk about, where we've been and what are we seeing now. And so, maybe with the employment and the population growth, Leanne, we've talked about this multiple times. In the space of retail, we've seen some store closures, we've seen some other things. What are you seeing? What's forefront of you in retail?
Well, retail is fun to talk about because I usually don't like to talk about it before 8 a.m., but it's fun to talk about because I think everyone in this entire room can relate to retail.
Right.
I mean, how many people, just by a show of hands, have driven by a vacant restaurant or a big box store and kind of worried to yourself, like, are we, losing this to Amazon, or is this in trouble? Has anyone had those thoughts? So, I mean, by the same token, industrial, there's probably very few people that have driven by an empty industrial building, which don't really exist right now. But they probably not thought, well, I wonder if there's a supply chain problem. So we all kind of think about it, and there's an implication just by the phrase brick and mortar and what's happening with brick and mortar, that it's getting overtaken by Amazon. And the reality is, if you really start looking at the facts, for every closure that we see, there's 5 openings nationwide. So there's a lot of growth that's happening. I don't think we're really in trouble. Yeah. But the average person really doesn't know why these things are closing. So there's always rumors online on dawn days, blog posts about what happened and what should be there. And for the most part, I mean, we have some interesting stories here locally about what has happened to some of these places, which I won't name names, but some of them have to do with debt. People just get overextended. They don't reinvest into their company many times. And then locally, we've just had some interesting stories. We've had some bad actors that nobody could have foreseen that have caused the closure. We've had a corporate food user that literally got a new CEO and said, give me the bottom 75 stores on sales, and even if they had opened 2 weeks ago, they closed. Wow. And in some cases stopped paying rent and started playing a game. So that'll go unnamed, but I think many people in this room probably were affected by that. And so, it's just sometimes corporate decisions are made in a way that that try to help their bottom line go up. And so other times we actually also have unqualified franchisees. We have a lot of franchisees in this market, and they're selling a franchise and not necessarily the experience of that operator, and so that often happens.
I'd add one comment to that, kind of tied some industrial, but Leanne's last comment about an experience, I think you see a lot of retailers, they're transitioning to creating an experience or a convenience. And so you drive by a Walmart, and it's convenience, it's almost a mini distribution center. It's amazing to see the lineup of cars in the delivery pod spots. And so it's like a mini distribution. And so it seems like it's trending to, you got to create an experience or a convenience that alters their online experience.
Yeah, good points. So the population growth and the employment growth, Pat, we've seen quite a bit of office, right? And we've seen office development, we've seen lease rates, vacancy. I mean, what are we seeing here? I mean, are we overbuilt?
Well, it might look like that when you see all the cranes and people are going, my gosh, how much more office can they build, or how much more industrial can they build? But we're at all-time lows when you look at vacancy. Last year alone, we did close to 750,000 of net gross leasing in office. So the market's very strong for office, and there's not a lot of options for people. So when companies are looking around and looking at Boise as a new area, or the Valley for that matter, for a new site location, they're really struggling finding anything over 15,000 feet. So when these companies are looking to move to Boise or the Valley, there's not a large selection. So the developers like BVA, Nahas, Scott Shaner, these guys see that need and they see the pressure that we need to be able to react to these tenants when they're coming, because when they come in, they need to be in a facility within 6 months or less. And so they're meeting that demand right now. And the other thing is, like, a majority of our transactions in office are between 1,000 and 3,000. It makes up well over 60% of our transactions.
Yeah.
So you're starting to see a lot of that being absorbed, so there's less and less available in that size in the marketplace. And that's going to continue because the market's still strong, companies are growing, and so with that, the need for additional office space is required.
Clay, from an investor standpoint, you see a lot of folks coming to market. What type of users are interested in this market? And it could be office, could be industrial, but I kind of playing off what Pat said there, are we continually getting interest from out of state, out of region?
Well, for sure. It's kind of joke around about, I came back to Idaho 14 years ago, and early days you'd have a call and somebody would say, I really like Boise, Iowa. And you'd say, well, it's Idaho. It's further west. Most of our investment capital is coming off the coast or local. And then all of a sudden we've seen a migration, Utah and the southern belt, and then Colorado. And now we're seeing capital. It still mostly is west of the Mississippi, but now we're seeing more capital across the nation coming. And Boise's on the map. I mean, every day you see a new article. In certain segments, especially in apartments, we get a call a day from somebody wanting to come into market to buy. And so demand far outstrips supply. But capital sees the positive story of Boise. It's a clean life, it's a conservative life. The metrics in our market relative to other Intermountain markets is low. They look at the price per pound value. So there's a lot of reasons capital wants to come to Boise. It's a great story. There's a great feel. I mean, people come, they say, it's just so friendly here. People actually say hi. And anyway, so there's a lot of positive reasons why capital wants to be in Boise.
Play on capital, so cap rate across our products. So Leanne, maybe on retail or Pat on office. Given where cap rates are right now, I mean, do we feel like we're at the bottom? Do we feel like this is the low end of cap rate? And you see a lot in retail. Maybe start with you.
I think we've kept very steady on our cap rates for retail. We're lacking supply. And like Clay said, we do have a lot of money coming in looking to invest. And you're not going to want to hear this, but it's all cash. Nobody needs a loan.
Everybody needs a loan.
And that makes it wonderful.
Everybody needs a loan. My official plug, thank you.
But we do have a lot of folks coming in. I mean, I actually see a lot of people who are putting their kids at Boise State that want to make an investment in the market. So I don't know if they're writing off their trips here to visit their kids, but a lot of people also that have a second home in Sun Valley and want to come and invest in the market. And a lot of people, to your point, looking for a conservative lifestyle, actually. I get probably a call a week from people saying, get me out of California, it's too liberal. And so they think that, and they're coming to Blue Boise. So we'll see how that makes a difference in the future. But I think for cap rates, because the supply is so low, the demand is still so high, we haven't seen it dip below probably 5.25, and that's pretty low for retail. And it's got to be a single tenant deal, but we're running out of those. So multi-tenant retail is a little bit tougher, though you can get some higher cap rates on those. But we really need more product to sell to satisfy the demand.
Mm-hmm. Relative, oh, sorry, go ahead.
Well, I was just going to step in. I think in that space for sure, long-term net lease retail, you see a lot of all-cash groups coming in. Primarily other categories, larger purchase price, they are reliant upon debt. They need it. If you look over the last year and a half at when we had gaps in momentum in the market, it's when the rates popped up. And I mean, so there's political uncertainty and rate movement that really causes a pause in markets. And so when we saw it, when rates started to push up into the, when the 10-year went, it was like a 2.5, we really saw a reset where buyers said, hey, I got to model in my debt into my returns. And sellers were looking backwards saying, hey, you were willing to give me this before, I got to get that again or I'm not going to sell. And so it was a short-term gap in the market kind of freezing up. I mean, for lack of a better term that's less scary. But then, 10-year came back down, the financial markets kind of flowed again in a good range, and on paper it made sense, so people could then step back in. So cap rates, I think they go as low as debt will allow it to go. I mean, people will model out a 5 to 7 year return, and debt as a component right now, if you can get 3.8% money, yeah, I can chase a retail deal into the fives. I can chase an apartment deal into the low fives or maybe even high fours if I've got a nice story coming out of it with 10-year debt. So it largely does depend on debt in my world.
And 1031 money. I think there's so much 1031 money coming into this market that the economy's good. They're selling in California at
And they don't
3.75
care about
cap.
cap rates so much.
And they need to reinvest, and they see Idaho as being good. They're surprised sometimes to come in and learn that our cap rates are as low as they are. So that's a lot of it. A lot of the money we see is 1031.
So a lot of questions from the audience on this one. So cap rates with rising interest rates, right? So Paul comes out this morning and says we're still in a moderate growth pace, so it sounds like they're going to hold firm on monetary policy. What product do you think is most sensitive to rising interest rates?
Not retail. I don't feel that it is in retail. It may be.
Not even single tenant, multi-tenant?
Most single tenant deals are $3 million or below, and so that's pocket change for some of these guys coming out of California.
Okay.
I think it's reliant upon, again, the debt story, right? I mean, again, a net leased buyer that's in an exchange coming out of California, wherever else, $1 to $5 million, they just need a home, and they need to know that they got a coupon clipper coming in, so they're going to be a lot less sensitive to rate environment and cap rate as well. Those product types that are reliant upon debt, there's going to be more sensitivity. So I would say office is one of the primary ones that would have more sensitivity.
Okay. All right. Pat,
Industrial, definitely has the strongest demand. You're seeing cap rates in the low fives, 5 to 5.5%.
Why is that, though? Because a couple people have asked me, and in fact, one asked me this morning, drivers behind it. I mean, what's driving, and we saw on the video, what's driving this demand? Is it people coming from out of state, big users? Is it people here trying to expand their own space?
Well, it's kind of a mixed bag there. It's a lot of 1031 money, and basically these are coupon cutting type of investments. They're triple net, so people like that. They don't have to worry about managing it on a day-to-day basis. Where on office, it's a little more demanding because you're going to have a property management company, and so it takes a little bit more work to do that. They're a little more sensitive when tenants have to renew. So when you have to renew, you still have to kind of reinvest into the building and into your product. Where industrial, it's not quite as heavy when it comes to putting in more capital if a tenant moves out. So they like that, and they like the stabilization of industrial right now. And next would probably become your apartments, obviously, which we're not here to talk about it, but the apartments are in high demand, obviously, everywhere.
Yeah.
And so that's one of the segments. But industrial is definitely one of the hot items here.
And BVIP does a great job of trying to attract those jobs in the industrial sector.
Multifamily is a question that you all had asked, or I don't know if you all did, but it was asked quite frequently. Clay, from an investor standpoint, out of market, is there really anything left from a purchase standpoint, or is it really just developers who have delivered product here in the last couple of years continuing to deliver more?
Well, it's a great question. Yeah, the bulk of the deals we do are off market, just because we're so heavy on the demand to supply side. We get a lot of groups that come in and say, Boise checks all our boxes. We want to be here. How do we get more units here? How do we start? And they all have the goal, we need to get to 1,000 units within the next 3 years. And it's very difficult without being very aggressive. And so then they migrate to, well, we need to build then. So it's kind of shifted that pattern, and it's not easy to build. I mean, the cities right now are hammering deals. I think that just maybe political pressure, neighbor pressure, it's what's needed. It's where capital is trying to drive to. They see the metrics and they say, hey, there's more units needed. But cities are pumping the brakes a bit. But yeah, we see a lot of investors that say, if we can't get here in buying existing product, we will come and build. And so we're definitely seeing a much heavier round of groups trying to figure out how to pull off buying ground and building units on them.
So on new builds, if it's industrial or if it's retail or multifamily, what percentage would you say are out of market or out of state developers that have come in the last couple of years?
You want me to answer that first?
It depends on the segment, probably.
Yeah.
Yeah, I mean, on the apartment side, there's a pretty good balance. There's groups that they're incumbent guys that own ground already. I mean, Corey Barton's got a pretty strong division now of building apartments. You have other groups here. The Brighton Corporation's got a nice multifamily arm. They've done a great job with the product they build. So there's a healthy round of local development here.
I'd say on retail, we like local developers because we often find that we represent tenants that come in and they say they have preferred developers that come in and they think, oh, we're going to teach these guys in Boise how to do development deals because they come from bigger cities, and more often than not, we find that they fall flat on their face, and our local folks can do a much better job at a cheaper price, better return, better product, and they can do it a lot quicker than people coming in from out of market. So we much prefer to, when we have tenants, to go seek out local developers to do those projects.
Makes sense. From a out-of-market perspective, staying on that, because there were a lot of questions on this, does it seem like the developers are here to stay? Or are they really, I mean, are they taking root here, or is this just a stopover on their way to another market?
I would definitely say they're here to stay. I mean, they've invested a lot of money. So when you got people like the Boyer Group, Adler Group, where they're planning on building millions of square feet of industrial space, they're here to stay. And they got big marketing plans for these places, and they have far-reaching markets too. So they're able to go out and reach out to these other markets where we really haven't been able to bring those people in now. On the office side, it's more of the local community that are building offices. You see BVA, out of 10 Mile, and you see Raffinelli Nahas downtown, 191,000 square feet. So you see a lot more probably local development when it comes to the office side. I would say on the industrial side, you're probably seeing more of the, companies from outside coming in and willing to invest.
So industrial distribution can't help but think of Amazon, right? So Leanne, is Amazon having an impact on the retail space here locally?
Everybody assumes that, I think, from the get-go, but the reality and some of the things that I talked about earlier is that the closures we're seeing almost never have to do with Amazon. We are going to have a fulfillment center in Nampa, but I don't see that impacting our retail that much at all, if any. I mean, if people are concerned about retail, I've said this a lot in public forums, which is, if we really want to grow Boise and we want to have retail here, buy local. And you can tell they're doing a good job when somebody like me, who's 100% commission, my entire livelihood is based on brick and mortar, and I still order from Amazon. I mean, they're doing something right, and there's a convenience factor there that is very hard to deny. But if you are really concerned about it, and if we do want to support more retail, better restaurants, then we really do need to buy local. And when retailers do look at this market for new market entries, they absolutely look at sales of their competitors. So it's very important that we continue to support the local retailers. But I think the Amazon is, at least having it here locally, is not going to affect our retail at all.
Okay. So buy local,
Yes.
Absolutely. So a little bit here on where are we headed, right? With the time that we have here, a lot of questions. What do we think, right? Where do we think things are going? Clay, from a investor standpoint and from the future that you see, I mean, what are your prognostications?
Well, it's always a tough question. We look at the political environment, the election coming up. That's going to have a big impact. The things we can control, it looks like we have a good runway of debt that's going to be stable. When you look at it from a development standpoint, we've talked about that a little bit. People are figuring out, how do I develop smarter, more efficient spaces, because costs keep moving up. So I think it's being strategic about what you want to buy, understanding what the longevity of it is. I think with our market locally, just with so much growth, there's a lot of opportunity you can even make mistakes in a growing market and usually come out okay. But I mean, who knows? I think we have a good runway in front of us. I think the markets are stable. Mm-hmm. There's a lot of capital combined with debt that will create a steady runway in front of us. And so I don't know.
So 12, 18 months is this runway?
I think so. I think we have at least 18 months of runway in front of us, if not more.
Okay. Leanne, you were saying?
Well, as far as retail goes, I think we've obviously been discovered, and so we hit the map, hit the target of a lot of retailers once we hit that 700,000 mark, and so people will start looking at us. I think the biggest challenge we're going to have, as in southern Idaho anyway, and really more particularly in the valley, is our lack of infrastructure when it comes to retail. I've lived here my entire life and never lived west of Vista, but I used to travel past Vista all the time. Mm-hmm. And now I'm feeling it for the first time.
The transportation infrastructure.
Transportation,
yeah.
I can't get anywhere in the same time frame. I can't get a seat in a restaurant on a Monday night. So I think that's going to be our biggest challenge, is having the infrastructure there to allow people like me in the East End to go to the village more. Mm-hmm. Whereas we're going to start seeing retail folks just staying in their little happy place, in their little pocket, where they don't have to travel more than 20 minutes. And now that means you really can't go past Vista or the mall from East Boise. So that might create a demand for retail in more neighborhood settings than we see now.
More densely populated retail.
Yes.
Pat, what do you think? What's your...
I think the next few years are still going to be very strong for the Valley. You still see a lot of companies, especially on the office side, where they're moving out of the California area, the San Francisco area, Seattle, because the demand and the price for rentals are there. You're getting close to the $75 a foot. Well, they can move their back office people to Boise and now pay $28 a foot to in that range, and still have the quality of life here. And so that's what people are looking at, is they're looking at, what does a town offer for my employees if I'm going to move here? And that's where we see just a lot of demand and pressure. And that's why these developers are now going out and, a lot of them are doing spec, or they're, having at least 50% of the building already full.
Yeah.
And you're going to see that continue, I think, with, as long as these bigger cities, with their pressure on rents going up and population, they're going to continue to migrate to Boise, and you're going to see that demand. The same way on the industrial side, the Amazons, you think about it, people are like, oh my gosh, Amazon's here. But then you think about the chain reaction that it causes, because there's suppliers that have to follow these big, companies. And so you're going to continue to see those people come to the market as well on the industrial side.
That makes sense. So last 40 seconds or so, what do we think about the market as it relates to the impact from a presidential election? Is that something that, do we think are we insulated from that? Is that going to impact us? Does it?
It definitely will, yeah. I think it's a tale of two cities. I mean, it just depends on how things shake. That's my opinion, but.
Well,
politically set.
Yeah.
Pat?
We'll know in October, right?
We'll know in October, exactly.
It's one of those things where you really can't, I don't think Boise's or the Valley's based on who comes in office, who doesn't. I just think the demand for the valley is, and what it offers, potential employers to move here far exceeds any type of political realm that's going to go on.
Well said. Well,
Maybe one quick thing I'd add is,
Yeah.
you asked before, capital coming here, staying. Capital comes here not just for the returns, which is maybe an altruistic statement, but people love the story here, and they come for other reasons. I mean, I consistently get people saying, man, my boss just keeps saying, we've got to be in Boise, we've got to be in Boise. My daughter's at Boise State. So I do think, regardless of kind of the bigger picture items, we have a great story here that people want to be a part of.
I think so. Well, our time is up. So thank you all for listening. Hopefully you learned something here. I certainly did, learning from a panel of experts. And so, Justin, we'll turn it back over to you.